If you're looking for professional day trading education and high-level trade analysis and dissection, you, my friends, have come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to give you exactly that. Professional day trading education, all here for free on YouTube and on X. And tonight, we're going to be going over one trade, worked multiple times, so there's multiple entries that we can go over, and discussing how to properly wait for those entries. So one sec here, folks. I hope you all had a wonderful day. I'm going to fire up these charts and let's rock and roll. Okay, so now that we're into the charts, we are going to go over Qs. Now, for those of you that are just joining us, and I know I get repetitive when I say this, but I do want people to understand that these blue levels that you see, they're not marked after the fact. These are marked prior to the market open. Generally, they are marked at 9 a.m. East, and then I develop fully loaded trade plans with contingency plans. If they don't work, what our risk is, what our entries are, all of that. So on today, we were looking for one of two things, and we were going to open up essentially smack dab in the middle of these channels, which is really nice, right? Because then it's a matter of first directional pick. So if we would have dipped at the open, we would have executed the long to ride up for this to be our target. That didn't happen. What happened instead was a pop at the open, and then we executed. So I'm going to clean up these charts just a hair and stretch them out so then you guys can get a really good view on it and zoom in a bit. So the first set of entries here, if you look to your right where I'm circling with my mouse cursor, you're going to see my entries chart. And it's going to be inverse because I bought puts. So on this, the market opened up. It shot straight up into our entry level. We executed coming up into it. First entry being here. Secondary entry being here. As it pulls back, I'm always going to pay myself. It came back into a very small level of support. And that's what this shit boils down to. It's micro levels of support and resistance, and those are always your targets. Now, where a lot of traders fail is they'll look at that and they'll see a pullback like this from your entry to your target and say, that's not enough. I want more. So what you're doing is you're fucking dictating to the market, which is a 1,000-pound gorilla, what you want it to do. Well, ask yourself, how well does that work out? Well, it doesn't work out well, does it? So what you do need instead is a proper target and profit taking strategy where you can actually lock in on these trades. And that's exactly what we've done. So first execution here, pay ourselves here. Then what we were waiting for on this secondary entry, as it came up again, tested this level, it's fine to add back in. And you want to add back in just a little bit. So as it pushes through, you add. Okay. Now you don't have to add. It's okay. You don't have to, but I'm working a little larger of a position. So I'm going to add. Now we wait. We wait for one of two things. Either this thing keeps going and potentially we would stop out on the position and look for a reset, or if, which is what it did, it slices back through that level and completely rejects. That's a good sign. I'm also watching SPY at this time, and SPY basically has done the same thing. It came up into that level, kind of barely pops through, and immediately rejects. So on that trade, I'm going to remember I entered up here and I pay myself. I'm always locking in. When it pops back up to retest that, now you're good. This is where you can actually apply a little bit of pressure in your trade. And by pressure, when I refer to pressure, I'm referring to size. Now, I'm not saying I like threw a shitload of size at it. It's not a huge trade. I think I locked in $3,980 on this trade. But I'm still going to add back in. On my first position, let's say I use 100% of an initial starter position, okay? On my second trade, when it popped back up into that level and pushed through a little bit, I'm only going to use a percentage of that because I locked in, because I've already guaranteed profit on the day. I don't want to ever give that back fully. I'm okay with it going back against me profit wise a little bit, but I don't want to ever turn a beautiful green trade red. So what I do instead is I will size down in that position. So instead of 100%, just using some round numbers for you guys, instead of 100%, I'm going to be using 50%. And then if it gives me exactly what I'm looking for, I can then get back in here with 100, 150, possibly 200% plus, because it's showing me exactly what it's going to do next. Because what it's going to do next is it's going to now sell off, and then it's going to give you some follow through. Why? Because it's tested multiple times. It's going to give up. Now, I'm not saying this fucking thing's going to go to zero. I'm not saying that. But what I am saying is you will get some follow through. So on that next trade, as it comes down right here, I'm selling. I'm selling the bulk of my position, and then I'm going to be patient. Now, you might be asking, well, why didn't you re-enter here? Well, I could have, because it was holding this morning trend. But what happens generally in these situations when it comes up that far, all of these areas for shorts to really work, the average retail trader, dumb money, we don't get that label for just no reason. The majority of retail traders have zero plan, zero trade plan, zero risk strategy, zero entry strategy, zero everything. They don't have a strategy. They don't have any strategies at all. So what happens is when it comes up this far, these shorts, the average retail trader starts getting spooked. And it doesn't take much for this thing to shoot through the roof and squeeze up. So I've already locked in a fairly substantial day for only working, what, 20, 25 minutes. I've already locked in almost $4,000. So do I want to risk that? Fuck that. No way. I'm never giving that back. I'm going to keep that and bank that shit. I'm going to pay bills and feed my fucking family with that shit. So that's exactly what I did. I left on my remaining position because I didn't have that much left at that point. And then simply as it comes down and hits my actual target now of this other level, which is always my main greedy target, I'm going to pay myself, which is also essentially yesterday's lows, Friday's lows. And that's the trade. So if you want to learn more about like how to really enter into positions and pay yourself, like profit taking, I'm doing a webinar this Thursday at 7 p.m. East. Now, some of the material that's been sent out on social media originally said 6 p.m. It is 7 p.m. 6 p.m. on my time schedule or my time frame. It doesn't work. So we had to move it until 7 p.m. East. Okay. And I'm going to be doing a full-blown profit-taking webinar. I'm not holding anything back. You will absolutely want to see this because I'm going to be going over stuff like this and much, much more. I'm going to show you how to manage these fucking positions all for free. No strings attached. So if you want to do that, make sure I'm going to leave a link in the pinned comment of this video with the link to sign up. So make sure you do so. You don't want to miss it. And if you don't want to wait for that and you want to come learn from a proven professional that's been doing this well over a decade, come to tricktrades.com and learn with a coach that can actually get you there. And not only that, I actually give a shit. I want to see you make it. And if not, please just continue to enjoy the free stuff. But it's going to take you fucking forever to do so. But that's on you. That ain't on me. I've already found my freedom. Now it's up to you. It's all about decisions and choices. Okay, guys. I hope you have a wonderful evening. And we'll see you tomorrow. Adios.